come in very, very strongly with a growth of something like 34%. Now that is quite significant in the overall scheme of things. We've also seen our foreign exchange income grow very, very strongly, by 47%. And even lines like commissions, which did not grow much previously, were up by 18% in the 9 months. So in overall, we've seen our total income grow by something like 28%. Now, for us, that's excellent. That has been driven mainly by the growth in our balance sheet. If you look at our balance sheet, you'll find that our loans have grown very strongly during the same period, and that's a key driver. We've also seen over the last 9 months our customer numbers more than double. September last year, we had customer numbers in the range of 600,000-700,000 customers. Today we have about 1.5 million customers banking with us. The exciting products like Bankika that we have rolled out during the course of this year, the strong growth on the mortgage side as well, because again we've revamped our mortgage products. We've seen a lot of uptake there and a lot of appetite in the construction sector, both for residential property and for commercial property as well. So all those put together have driven our revenue growth over the last 9 months. But we've also seen a growth on our expense lines as well, because our expenditures have gone up by 23%. I must say that within that 23%, there's some one-off exceptional expenditure relating to restructuring within the business and the voluntary early retirement program.
Speaking of expenses, your operating expenses grew by 23% from 11.2 billion to 13.8 billion. What plans do you have to cut this cost as we move forward?
Our cost-income ratio is still standing around about 63%. We have a target to bring it down to about 58% in the short run, down to about 50% in the medium to longer term. And so it's an area of constant focus for us. And what we are doing there is really looking very much at the way we run our business, focusing on the key cost areas, focusing on processes, looking at how technology can help us manage our costs much better.
You are the largest bank in the region in terms of branch network, as well as asset base and also capital base. What plans do you have for the capital expenditure for the next 5 to 10 years?
I see that we will continue to grow our branch network. That will call for increased capital expenditure. We are now moving into an area of agent banking. As you're aware, the regulatory environment now allows banks to appoint non-banks to offer limited banking services, like taking deposits, paying out cash, receiving bank application forms, and some limited, cash transactions. This will require investment in technology with those agents to enable them offer those services, so that if you go in and pay or transact at an agent, that transaction is reflected immediately onto the bank's core banking system. So that will require investment in capital, in assets. Again, as we go into the area of innovation, looking at our partnerships with the telco companies, mobile, internet banking, etc., that will also require capital. We also will be looking in the coming years of further expansion. As you know, our vision says we want to be the preferred financial solutions provider in Africa with global reach. That means, therefore, that today we operate in 5 countries. Over the next 5 to 10 years, we should be operating in more than those 5 countries. And that will require, again, further investment in those countries, which will require capital investment.
It is noteworthy your results for the first 9 months of this year have surpassed the whole of last year. What areas will you be looking at, and what is the outlook for the financial period of this year?
We certainly want to continue to drive the growth in our loan book. We now have lots of capacity, given our new capital, to drive that loan book further. We are seeing with the growing economy, growing prospects, and very positive outlook for the economies in East Africa, with each of them looking to grow at more than 5% next year, and in fact, even as we come to the tail end of this year. The prospects for growth on the corporate side, the prospects for growth on the SME, the prospect for growth in mortgage business, and the micro side are areas that we continue to focus on. We continue to focus on our efficiency, driving efficiency from our cost base. We continue to focus on quality in our loan book so that we can reduce the provisions or make recoveries of assets for which we have made provisions.